Welcome to this week's episode of The Capitalist Investor. We are a little light this week. We've got me, Luke, Cool Hand Luke, and we've got Tony the Tiger.
Two men last standing.
Last standing. I don't know what's going on. I never know what's going on, I guess, but I don't need to know what's going on because at the end of the day, we've got all kinds of craziness happening all around the world, which we're going to touch on today a little bit. We are going to touch on what is broken. A lot of things seem to be broken right now in either the economy, the stock market, personal ways of thinking, behavioral finance changes.
Yeah. I think talking about that is like, the market's going out, yet everything else is screaming red. So what's happening? Why is the market going up, yet you keep on hearing all kinds of bad economic data?
Right.
Like what is pushing this forward?
Or is it broken? We might not even be broken, right? I guess you got to tune into this episode to find out.
I don't know.
I feel like my body's broken. I have lower back, and then I popped my shoulder out but sleeping 2 days ago. I don't know what's happening, man.
We'll do a war story. Like a physical war story, like my shoulder hurts and my back hurts. Because we'll get Mark here because he's always hurting.
We're just getting old, man. We're just getting old. All right, so we got that, and then number two, we have what do we have actually?
All right, so we're doing what's broken.
What's broken?
Like we'll talk about that. We'll talk about CPI.
CPI came in a little hotter this morning than expected, so we're gonna be hitting on that.
Markets rejoiced, obviously. So I have a conspiracy theory on the CPI.
Nice.
I found one. Twitter's amazing place again.
This is why my brain hurts every day, Tony, because all we do here apparently now is talk about all the information out there, and some of the information involves conspiracy theories, and my brain just hurts.
We've been talking about aliens, and now there's UFOs.
That's right.
All over.
We called it.
And you can't even ask questions, or you'll be put in jail.
We called it. We said it first.
We've been talking about it.
Capitalist Investor said it first.
Aliens.
And then we got a cancel segment, as always, so we will wait to tell you what that is. But it's pretty obvious if you're in Ohio. You can take a wild guess at what that is. So talking about number one, stock market. All right, let's on the economy first, because economy kind of is, the forward-looking indicator.
Let's do this. Let's hit the CPI, because it came out this morning, and it'll lead into what's broken.
Sure. Let's do it.
Well, you said you have, obviously it came in hotter.
It did come in hotter. So what's interesting is CPI, the expectation was like 6.4, right? And then it came in at 6.5. So it came in just a little bit hotter on the core CPI numbers year over year. But the scary part is the month-over-month number that we always talk about, right? So the month-over-month number came in at 0.5% month-over-month, which was hotter than expected. And that you put a 12 month on that, it's 6%, right? So
still at 6.
It's still accelerating. Inflation isn't decelerating; it's still accelerating. Like people think
disinflation, man.
Yeah. So there's three words out there. There's inflation,
right?
Disinflation, and then deflation, right? People get deflation and disinflation mixed up. All disinflation means is that the rate of inflation is de-accelerating. It's not going down. It's just the rate. It's not going up by 1% per month now. It's going up 0.5% per month, but it's still going up.
It's still, the rate of change is less.
Right. What we need is actually a deflation event, and we have not seen that yet. So the reason why the market's kind of reacted kind of wild today, and we're doing this episode actually one day earlier than we usually do. We're doing this on a Tuesday. It's coming out on Thursday. The reason why it's reacting weird is because initially people took it as, okay, it's coming down a little bit, but then digested it and you realize that shelter is accelerating more. It's actually accelerating faster than it was over the past 6 months. Food inflation still rising above 10%. And then you take a look at energy costs are still staying elevated. So essentially what you eat, the energy you're consuming, and what you're paying for house-wise or rent-wise is still going up, which means it's sticky.
Right. So I don't know where that lands. I don't know if the things you just mentioned land in the fundamental or the macro, because I think those are all fundamental. Like those are all baseline things that are heading up. That we can just see month over month, year over year, like how much they're going up.
Yep.
The macro theme. So why is the market going up? So I'm going to land on this macro theme. So the market is going up on bad news because a lot of people are waiting for them to overcook the interest rates, and they have to quote unquote pivot, which means rather than increasing interest rates, they don't even pause. They just start ratcheting them down.
Yeah.
They're not going to ratchet like after today's CPI, like they could go to, they were looking at 0.25 point increases for the next 2 or 3 months. It could be quarter for the foreseeable
for the
future,
next 4 or 5 times,
right? Or they can even go up to 50 points again, 50 basis points for this next ride because it got so hot.
Well, from our research, you put on a zero, so you can't just throw a 12-month on 0.5% and say, okay, inflation is going to be 6% year over year from a year out from now. That's not how this works, right? There's a little more complicated, a little more research that goes into this. But from our research, from our, all the great research we get from third parties in our team internally from putting everything together, from our research, you take a look 12 months down the road, a 0.5% inflation number right now means inflation is going to be between 4 and 5% 12 years from now, or 12 months from now, 1 year from now. It's between 4 and 5%. Fed's target is 2%.
Right.
That means it's 2 to 3% above what the Fed's target rate is. So all those pivots that everyone was pricing in by the end of this year is not happening.
No.
So you can get the word pivot out of your mind. We've been saying that for a while, but there's still people out there that say it.
Well, I mean, some bad things would need to happen, I think, for them to pivot. Like bad as in like COVID lockdowns bad. Again, like it'd have to be something very monumental because everything just shut down or something.
Like, China really spy balloon, spy EMP.
Balloons, maybe, they throw up like a, one of those electronic
EMP,
pulse.
Yeah.
So something, Russia nukes somebody. Us or Ukraine. I don't know. Pick your poison.
I hope not.
But I'm just saying, like, it would have to be something monumental for them to quote unquote pivot. Right now they're dealing with what's ahead of them, and there's, it's rocky waves, but it's manageable. We can still, drive that boat. But so we're talking about macro, and I don't see anything on the docket for them to pivot, pause, or anything. Like, it's foreseeable future. So we're talking about that now. I heard this, like, so I can understand technicals. Am I a technical analysis person? No, but I can understand them. Mm-hmm. And there's a lot of momentum to the upside right now. There's a lot of buying. There's a lot of intraday call options being bought. Like, there's a lot of bullish people out there right now. Yeah. And I heard one of them yesterday on one of the just talking heads on one of the networks out there. I'm not going to name names. But they asked him, what do they expect the S&P to be at by the end of the year? And he said, and mind you, the S&P is at what, maybe 4,100?
4,100, yep.
He said 4,750.
That's like a 20%.
That's almost
like 18%.
18 from here.
Yep.
And I laughed out loud because I was listening to this in my car. I laughed out loud in my car. And I started writing this stuff down, like what he was about to say. And he came up with some statistic that 70% of the time, when the market is up over 5% in the first 25 days of the month or the year, so the first 25 days of January, 70% of the time the market is up over 20% from that point going forward. So he's saying, like, we're talking like 25%.
But guess what? The Kansas City Chiefs won too, which says that the market's not going to do too hot this year. So you got apples and oranges there.
Yeah, I wonder if they have any correlation. They have correlation on the coin flip. They got, they were talking about how the Super Bowl thing.
But it's interesting though. You can use all the stats and history, numbers all you want, and at the end of the day, there is some truth because we have history to base our decisions on now. But we are in unprecedented times. This has never happened before. Like, we have never taken this much liquidity out of the system. We've never shut down the economy and then pumped 40% of the money supply in 2 years into the economy. This has never happened before.
All these things have never happened. But that's why they're like, can't you're like, we have several CFAs, like, can't they, how much gray hair do they have? I'm like, it doesn't matter if you have gray hair because no one's lived.
Well, I mean, hell, I'm one of the youngest here, and I got gray hair coming in. So I mean, at the end of the day, what's gray hair tell you now?
But I'm gonna say, like, it doesn't matter. Almost it doesn't matter anymore because as much experience as you have in the past, and obviously history can repeat itself. Like, what's happening now is just new territory.
But what you hit on there is the risk management aspect of it, because you're talking about technicals, fundamentals. There's a disconnect between what the technicals are telling you and what fundamentals are telling you, right? The fundamentals are not looking too hot, both from a company standpoint, from a macro standpoint, but technicals, we rocketed past some of the 200-day moving averages. We can throw out all the technical terms you want. Fibonacci, we bounce off the Fibonacci 38.2, whatever you want to say, right? Technicals are looking good. So there's a disconnect there. And I actually got an email today from somebody that said, Luke, why have you been so bearish the past 3 months or whatever? The market's gone up a lot. Well, yeah, that being said, us being cautious in 2022 really helped us out because we were mainly cash for a lot of cash for that most of last year. We were very defensive, so that helped on the downside. So we protected on the downside, right? People think that, I got that email and it reminded me that people think we're in the clear now. People think, well, you've been bearish the past 3 months, it hasn't worked out too well. Well, what if 3 months down the road we look back and the market sells off another 15-20% from now? I'm okay with missing out on 7% on the upside the past 3 months if the market tanks another 10-15%. You know what I mean? It's all risk management. Like, there's points when the market's overvalued. There's parts when the market's undervalued. You got to determine when you think that is. That's part of being an active manager.
Yeah. You take a look at fundamentals again. We talk about earnings season. 70% are reported so far, and top line sales growth is in line. It's around 5%. That's what analysts were expecting. Yet they whiffed on the earnings. Our earnings went from the bottom line. Earnings growth went from -1.5. We're at -3.
Yep.
So companies are not coming. They're not painting a rosy picture.
No.
And that gap is widening and margins are rolling over.
Well, it's interesting.
We talk about it every week, but it's not reverting.
Well, it's interesting. The actual earnings themselves aren't really posing this rosy picture, but some of the guidance, some of the ways that these companies are saying their guidance for the future for the next year, it's pretty optimistic, really. And that's kind of concerning too, because it's setting the bar higher. It's setting the bar higher for like what they have to hurdle over.
Are they doing that?
A lot of companies. Tesla trying to hit 50% earnings growth this year. Like, they're trying to sell 50% more cars than they did last year.
Well,
when people can't afford to buy a car.
Like I said, with Tesla, he's got the 3 strikes against him, right? He said they're selling less, so there's a demand problem. He's lowering the prices,
which is demand problem,
and he's building these factories that he was thinking of building are practically built and going to start producing. So now he has a supply problem. He's got too much supply, no demand, and he's lowering prices.
And he thinks he can sell 50%
next year.
And the stock
is rocketing.
Because he said he's going to sell 50% more this year. Same with the airlines. Airlines said we expect travel basically to go up in 2023. What?
With what discretionary income?
Exactly. When
when you're paying for eggs and milk.
I was on Kafuto today, and we talked about how people are dipping into 401ks to live, to support their lifestyle. I mean, that's how bad things are. Is working people are dipping in the retirement savings.
People are the people that work, that travel, they're doing bizcations. Yeah. They're taking their business trip and extending a couple days.
Well, I don't do that, Tony. I don't got time for that.
Right. You're leaving leave
Denver tomorrow. That's why we're doing the episode a little early.
Gonna go talk and hop back on the plane and come home.
I come home and then I leave for New York 2 days later. So it's all business. I'll be out there and getting some good information from top experts around the world.
Why don't you just go straight to New York?
That's a good point. I could have stayed in Denver a couple more days. I messed that one up.
Yeah. The time travel, man, mess you up, dude. All right, we'll coach you up on that one. All right,
I'm young, I'm learning, man.
But now one more thing I want to do before what's wrong. So now we can just talk about the investor. So let's talk about the mentality part. And FOMO, fear of missing out, is a thing, especially in investing. And you can get ruined with it. Because you can buy on the top end and watch the bottom fall out. Rule of thumb: don't buy high and sell low, right? Or you could be, the one person that's so pessimistic that they're shorting everything and they're getting their teeth kicked in right now. So, what do you do?
What do you do?
What do you do?
It's a great question. You have a strategy and you have a process. That is the biggest issue we see in today's world. Is you kind of throw money. Okay, I'll give you an example. Somebody that I know, I think he actually listens to the podcast. So hopefully you aren't the person. You're okay with me saying this. I'm not saying any names, but he came to me and he said, Luke, I have all this, these stocks. I want you to take a look at everything I own. I took a look at everything. He's very overweight in technology. He got a lot of technology stocks, which performed very well for a decade straight, but it didn't perform well last year.
Right.
But the thing is, he had 60 different stocks, and he's got a full-time job, and he does 5 different. He's an entrepreneur. He does 5 different things, and I'm like, you got 60 different stocks. How in the hell are you keeping up with all of this on a day-to-day basis, doing your full-time job, doing everything else that you do? You have kids. He's got a wife. How are you doing all of this all at once? He's like, well, I'm not really paying much attention to my portfolio.
Right.
When you have 60 positions.
At that point, you're hoping to catch a headline.
Right.
And if you catch the headline, you're probably too late.
But when you have 60 positions all around and all kinds of different things, like some things get really out of whack very quickly,
Right.
especially in a bad environment, right? So that's the thing is he really didn't have a process. He liked to stock. He threw money at it, held it forever, and whether it did well or didn't do well, he kept it. And unfortunately, last year, the tech stocks got hammered, and a lot of his tech portfolio got hammered, and he's mainly in tech. So my point is, you got to have a process. You got to have some sort of way to check in, maintain what's it called, a stop loss on positions. Having 15%, if it's down 15%, you're selling, things like that, right?
I mean, I would have to say that, like our process, like there's the old saying, time in the market's greater than timing in the market. And my guys won't go, our investment team won't go from 100% invested to 100% in cash. Yep. They have mechanisms. They have a process where the most they'll ever go in a bad time is 20% in cash.
Yep.
So we can try and create a little bit of alpha based on where we think it's going. But if we're wrong, we're not completely striking out. And I every time I see somebody in cash, I'm like, okay, when did you get in? Okay, I mean, like you're pretty close to the timing it perfect. When you get him back in, and the question is like, well, I don't know, or I'm looking for a triggering event. I heard this the other day, triggering event. I'm like, I'm going to wait till VIX gets to 45. It's like, the VIX, the volatility index is at 19 or 20.
Yeah.
The VIX actually went down and the market's down today after a hot CPI. Like that means that's another thing I can say is broken, right?
Yeah.
But I'm like, okay, well if the VIX goes to 45 from 20, that's 100%, over 100% movement. I mean, the market might have to go to 35 to 3,000 at that point. I mean, like who knows?
Well, and that's the part of using all the research that we have to manage risk and overweight, underweight certain sectors that we like and don't like, right? Yeah, we're active stock pickers, but we know which sectors we like the best in the current environment. We know which sectors we don't like in the current environment, and we'll make sure that we're picking the best quality stocks in those different sectors. Like that's the part of active management, why it's so important. You can't throw money at the wall anymore, and we figured that out. I think that's the disconnect too, is the psychological differences, is like the consumer behavior, psychological. I was actually talking to somebody on the call today about it, is that I think that COVID, with the V-shaped recovery in equities, you had QE pumped 40% money supply from the federal government. You had 0% rates back in the Federal Reserve. You had a V-shaped recovery very quickly in the stock market. People got used to that. People got used to buying the dip. They want any reason to get back into the market as soon as possible. And it's very, we might not crash. We might not crash 20%. But it's very possible, in my opinion. The worst case scenario is that you have no growth in the market in a 5 to 10 year time frame. You have a very stagnant, like maybe we'll be at 4,500 on the S&P 5 to 10 years from now. Maybe we won't have much growth. That's my biggest concern. You look at GDP estimates.
From in the 90s up to the 2000, there was virtually no growth. Yeah. I mean, it's definitely possible, but I just think it's just crazy that when was the bottom last year? September, October. Mm-hmm. And from there, I mean, we're up. I don't know,
10%,
10 to 15,
bottom,
almost
15, yeah.
15, almost 20, because the Nasdaq's flirting with out of bear market correction territory, whatever it may be. And what caused that? Because nothing got better. Like actually, the news is getting. I mean, other than having 9 or 10% inflation, and now it's 6. Like, you want to hang your hat on that one? Oh, here's my conspiracy theory on CPI though, and then we'll change topic. But so. President Biden tapped into the petroleum reserves again. Why? What is going on that he had to do that? Gas prices are
energy crisis, because we aren't energy independent here. So who knows the pipeline you're talking about?
No.
Are you talking about how the conspiracy theory is that the U.S. possibly blew up the Nord Stream pipeline?
Well, there's that, and it China being offline probably helped taper some of that. But did he get a whiff of the CPI? Because again, discretionary income goes towards groceries and energy primarily. And if he, is his strategy to tap the petroleum reserves to keep gas at $3 a gallon, at least here in Ohio, or $3.25, whatever it is, to keep the feeling that inflation isn't going
I
up,
hope
but
not.
it really is.
I hope not.
Everywhere else.
I hope not, because that's a national security threat.
It is a problem. But somebody said, like, did he get a tip on what CPI was? And the day before he said, I'm going to release some more Petroleum.
I'm going to call that insider trading.
It could be. It could be. So,
but yeah, I mean, it's possible. I mean, I don't doubt that, man.
It's my only conspiracy
at the end of the day, there's a reason why we have government officials, and they are supposed to be up to date with news information as quick as possible. So maybe he did have the information. Maybe he did do it because of that. Who knows?
Yeah. Rank that up there with aliens, I guess, and balloons. And we've been talking about aliens and look what happened this week.
I just want to make sure
we're ahead of the curve.
Like, at the end of the day, I enjoy talking about this stuff. I enjoy talking aliens. I enjoy talking conspiracy. Right. But at the end of the day,
I hope it doesn't happen.
Always am concerned. I am always concerned though talking about it. I'm like, I know people that go too deep into it, and they sometimes are crazy. Like they might be crazy, and I never want to be that guy.
I don't know. I just think it's more entertaining.
It is.
But I don't actually want it to happen.
Right.
Like, I think it would be really bad for a lot of the world.
I just want to be able to have my own property, to be able to do whatever I want on my own property.
They call that the American dream.
I want to be relaxed. I don't want to stress out anymore. That's all I want.
Look at the young age of yourself. They're like, that's called the American dream, sir.
I'm working towards it, man.
I'm getting there.
Working towards it.
There. I love it. All right.
Canceled, right?
Canceled with, go for it.
All right. So we got our canceled segment today, which is talking about an area where I grew up. It's I grew up in Martins Ferry, Southeast Ohio, right on the Ohio River. We all know that the train situation in East Palestine, where there was a derailment of the train and all kinds of chemicals released.
Vinyl chlorine?
Vinyl chloride. That's the name, which is very, very cancerous and not good for the environment. And I think, Tony, you got some stats on that. But before I get into that, a lot of bad things happening, man. Like, Ohio River's right by where that train got exposed, or actually they blew it up. The police actually blew it up. Like they purposely blew it up before it blew up by itself because they thought it'd be more contained.
They call that a control burn.
Okay, control burn, control explosion.
Politically correct. They didn't blow it up. They
blew it up.
Politically correct way is a control burn.
So anyway, they blew it up, and it might be a pollution. It might be very bad for the environment, pollution, and it's very kind of hypocritical because I grew up in an area where it's all coal mines, steel mills. And the complete, left, liberal, climate change activists pushed out all the jobs basically in my hometown area, including that area, for pro-climate change and making sure that we're better for the environment when you have not heard a single thing from Pete Buttigieg, essentially, and you have not heard a single thing from the liberal Biden administration about this event, which is affecting millions and millions of Americans.
Yeah, I mean, it shut down an entire city, it blew up, right? But the weird thing is you're not hearing much about it and how serious it is, and how toxic it is. And I even asked one of my buddies at a Super Bowl party, and I'm like, has anyone heard about this? Is anyone like, oh yeah, I heard something about it, but don't really didn't hear it, read anything because it's not blowing up on the news, essentially. So I asked my one buddy, he's a healthcare, not a healthcare guy, he's health inspector for Cuyahoga County. And I'm like, did you hear about this? He's like, no, and what is it? And I showed him the article. So immediately he looked up the chemical. Yep. And he said that the half-life on it is 2 days. So he goes, well, it should be like out of the system, so it doesn't sound that bad. I mean, I'm like, really? Like, that's all you really like? Yeah. So I'm thinking to myself, I'm like, here's a guy that kind of knows something about because he does this on a day-to-day. And I'm like, is this not a big deal? Am I crazy? Because obviously there's a lot of, you talk about a lot of farmers lost a lot of their livestock. You got that fish in the water.
Dead animals coming up, and I mean that's the immediate short-term impact, right?
A lot of the people that were exposed immediately are like, man, I got an instantaneous headache. I smelled this from 10 miles away, and my house was reeking of this smell, and I'm miles and miles away. Like, how
what's the
serious?
long-term impact of that? Like, right. What I don't like. I get it. If the half-life's 2 days and you're only exposed to it once, okay, I get that. But at the end of the day, if you're still exposed to it, you don't know 20 years down the road if that's going to impact maybe some cells in your lungs, some cells in your whatever it be, and the
damage is done.
Damage is done. Yeah. So what's the impact going to be? But also, let's say the half-life, you talk about half-life, cool.
Right.
It's half of it's gone in 2 days or whatever. Or, I don't know the exact chemistry behind that, but it still could be found in traces of that in the Ohio River and things like that. And 5 million people, or more than 5 million people, get their water from the Ohio River and things like that. So, I mean, what is the long-term impact of this? Why wasn't there a
if it
more
got in
immediate
the river,
need?
How far did it go down, and who's using that water for what?
It goes down to the Mississippi, right? So the Ohio River connects to the Mississippi, and it affects half of America, essentially, is what it does.
So
right?
how far did it go? Yeah, how far is it really contaminated down in those two? Even if it was a 2-day big problem, how many million? Like you said, it wasn't just the surrounding radius of that blast. You get in the water system, and where's it going now?
In the psychological aspect of it. Now you know that area is polluted, and now people might not want to live in that area. So what's the economic impact of that, right? If people aren't working in the area, farming is a big area in the area. Energy components like coal still and steel, the ones that did survive, I mean, that's big there. So people move out of the area because of something like that, because they're scared of being inhaling bad things. That's going to have an economic impact on the world.
I saw the one headline. It's like, hey, one of the main reporters for that area was put in jail. Mm-hmm. Why? Were they spreading bad words? Were they shutting them up? Were that like what? Really? Like you're going to put a journalist? I mean, like unless they were blatantly lying and fibbing and things like that. Like, I mean, why isn't the Inquirer
what are they
in
trying
jail?
to hide? Yeah.
So
canceled this week is what are we picking? Are we picking the train that's canceled? Are we picking Pete Buttigieg that's canceled? The chemicals, the Ohio River. What's canceled?
Let's just call it the media again.
The media's canceled.
They canceled this story, and I don't understand how it's not a big deal.
Yeah.
But one other thing, I was talking to one of my buddies, and this goes back to another podcast on electric cars are having negative impacts with salt water. And he lives down in Florida, and we were talking about controlled burns, right? Blowing things up. So we have these Teslas and other electronic car EVs, right? That once the battery has salt water in it, it will blow up. It will catch on fire and possibly explode. But it's definitely catching on fire. So my guy told me, my friend that lives down there, he goes, the police station, or I'm sorry, the fire station would put out an emergency alert saying, hey, if you have a car, we will tow it to a parking lot so that it can burn in peace, is basically what they said. They're pulling all these cars into a parking lot, and then once one catches, like it's just
blowing them up.
And he goes, and actually one of the houses down the road was a $9 million house, and the house next to it's like $11 million. And one of the houses with the $9 million house, inside the garage that got flooded was a Tesla that caught on fire, burned down the $9 million house and the $11 million house. $20 million.
Sounds like an expensive insurance claim.
They better hope they had insurance, right? I'm sure they did. But and then he chuckled and he goes, and some of these, like, he's a golfer and so am I, so that's we got on that topic. And like, how the course is after the thing. He's like, oh, they're getting better. But he goes, one of the unique things is that a lot of these golf carts have electric batteries. And they started to burn down. So some of the courses are upset that they lost their fleet of, golf carts. But he goes, but now they're getting all new ones, and they wanted new ones. So it all
sounds
worked out.
like we need to let free market innovation innovate a little bit more when it comes to car electric batteries.
Something.
Rather than the government picking the winners and losers, let the free markets do it. So we still got some time for that. So.
All right, that's it, man. I got off my tangents. I got them all out of the way.
Well, we thank everybody, as always, for tuning in to this week's Capitalist Investor. Next week, we hopefully have the whole squad back. We'll see. Who knows? I don't know, but we'll figure that out when the time comes. But thank you again for everybody tuning in. We'll see you guys next week.